Here we go. Sorry.
You're not off?
No, I'm looking for the thing to... I didn't transfer it. Hang on. Here we go. Let me... Nope, it's recording it all. All right. All right. Good afternoon, everyone. Today is 10/11/12. It is October 11th, 2012. Let's start right off with the results. I had 4 ticks profit on crude this morning and 8 ticks profit on the NQ. I didn't trade gold. I wish I would have. I was doing a lot of things this morning. But we got profit on crude and profit on gold. I'll go through all the trade setups here in just a moment. Before I get into all that, yeah, 10, 11, 12. Could be Frank. Before I get into all that, yeah. If you have not taken a free trial with us, sorry, Dennis, I gotta ignore the chat right now. If you have not taken a free trial with us, go to www.cfrn.net/apply. Take the free trial. In the free trial, you get 5 business days with all of our charts and data and indicators, and 5 days in our live trading room. In the live trading room during that 5-day period, hopefully you'll have enough time to even make some money, learn the setups, ask all the questions you need, and then hopefully become a partner. And speaking of partners, we have a partners meeting tonight. If you are on the free trial with us, you need to be a partner to get into the partners meeting tonight. If you do not know how to become a partner, send me an email, support@cfrn.net, and I will and I will reply to your email and tell you what it takes to become a partner. You guys have pretty much all day to get in there to become a partner, but if I sent you an email, it's a limited time offer, ends at 4 p.m. Eastern today. Let's see. That's the partner meeting and what it takes to get in here, and I covered the results already, right? I did. All right. Let's jump right into it here. The ES, I'll start right out there, okay, because that's what most of you guys are looking for. This morning, the first push at the ES was right there. All right, it pulled back down. We didn't take this long trade right here because we had a double top in place. We were waiting. Let's see. I didn't take this one because the YM was going right into a weekly trading zone, and I didn't take this one because we had a double top in place. We wanted to see the double top get broken. Once it did get broken, I put it in an order down here to buy right in here. Then it put in another double top right there. All right, it came back down and attempted to give us an entry down here off of that double top. Again, I hadn't looked to take the trade because it had a double top. And it pulled right through the BBC and kept going down. You can see that. We did have, during the break, there was a shorting opportunity right in here. If you wanted to short off the BBC right there, that was an opportunity to. There was also an opportunity to short the break of the yellow line, of the yellow brick road right here. There was an opportunity to short that as well. There was an opportunity to buy it over here. Frank, let's look at the 30-minute really quick, okay? There it is, big bounce right there, okay? This in the Globex, the break of it right here, okay? And then the bounce right over here. And that's what you would have been looking for on the 30-minute, okay? If we drop it down to, say, a 10, you can see we had the break of it right over here. This was in the Globex. It pulled down here a couple times trying to reach it, but it didn't actually hit it. It did over here when it was blue for a move back up to the BBC. Okay. Let me drop that back over here to 10,000 contract, and we'll move on to the next market. And Robin's, in response to your question, Robin's going to mention a few things when she comes on. Let's see. We had over here, I'm going to jump over here to the YM right now. Okay. We started out the morning. It was going into the weekly trading zone right here, so I wasn't taking any long trades anywhere. Finally, it broke up into the weekly trading zone, came back down, had an opportunity right in here. I'm not sure why I didn't take this trade. I don't know, but I didn't, and it moved up off of that. It came back down and gave another opportunity right in here. Yep, right in here. Okay, that was another opportunity. But when it broke it right here and it kept going up, That was an opportunity to go long there when it broke it here and kept going down. That was an opportunity to get short. Broke it over here in the Globex. Big move up. Just a couple of things to consider with that, okay? I'm going to go over that in more detail here in a few minutes. Wait till you see the gold chart for today. I did the gold chart a little bit different. I'm gonna spend a little less time on all these other charts because the gold chart I'm gonna do a little bit differently and spend a little more time with it today. This is the NQ. I took a few trades on the NQ this morning, both off of the yellow brick road right here. Whenever I had an opportunity to, I did, but I highlighted them all, I believe. What you were looking for when it bounces off of here, what you're looking for is the bar to move at least 1 bar's length away. Okay, so on the NQ, you're looking for it to move one point, and at that point you can take your risk off the trade. You can see right here, if you had done that right here, you would have gotten out break even unless you took profit at, say, 6 or 8 ticks. Over here, if you had done it, you had plenty of opportunity going down there. It didn't come back up. Over here, if you had done it, it didn't pull all the way back up to break even, so you had plenty of opportunity there. Same thing here, same thing there. Let's see, trading just the break. I'm going to get into that in a little more detail, but trading just the break, the bar that breaks it, that's okay. The one after it, the one that closes in the direction after it, is where you look to enter the trade. Okay, so you would be looking to enter like right in there. On this particular case, right here, this bar right here that closed down below, that didn't go anywhere. Over here, it would have been the bar that broke it was right there. The bar that closed above was right in there, so that didn't go anywhere. The NQ was pretty flat today as far as that was concerned. That kind of stuff works better on more volatile markets like the Russell, like the crude oil, like the gold, and the soybeans this morning. Wait till I get to the soybeans. All right, over here, these are the trades that I actually did take. I took the bounce right here off of the YBR this morning. I think I took that for a few ticks. I took a break even on this one. It actually slipped me a tick, and I ended up getting stopped out. I took the bounce over here off of the red area on the YBR, and on that one I wasn't looking for a home run, although it gave one. I was looking for the 1 bar. That's what I had as a target, the 1 bar, because it was at the end of the morning session. But it did give a really nice move down. Okay. Let's see, and that's where we're going to wrap it up here with the NQ. All right. I didn't want to just taunt you with the soybeans, but you're going to have to wait another minute on that one. All right. This is the euro. The euro had a lot of regular trades here, regular 4-tick range trades. And speaking of regular 4-tick range trades, I do have this available. This time it's right. Okay. If anybody wants this, these are the steps for the regular 4-tick range trade. Okay, there's really just a few of them that you're looking at. And it's the same on all the markets, all the 4-tick range markets. If anybody wants a copy of this, just type in here that you want a copy of it, or send us an email with just rules in the header. Okay, and I'll send it off to you. Actually, just send in the email might be easier. All right. But for the 4-tick range trades, we had a bullish cross right here, pull back and tested the BBC with an up close with bullish divergence down here. Right there is the bullish divergence. It did it again right there. It did it again right here, but it's going into the weekly zone, so I wouldn't have taken that one. Same thing there, but you didn't have any divergence on that one. Over here, you didn't have any divergence, but this would have been, I took off the other thing. This would have been a momentum trade. Okay. Let's see. Over here, you lost the divergence as far as the long side goes. You lost all the divergence in here. It was resetting. It was trying to, you see down here it reset, and the MA1's on the wrong side of the BBC to take any short trades. So it was keeping you out of the short market, telling you it was resetting. But it pulled back right here, nailed it right there, and almost got it right there again. Over here, I highlighted the area over here where this bar was the down close, this bar was the close below that, so you could have entered in short right in there for a move down. Okay, that is the 6E. Now, let's bring up the soybeans. Okay, the soybeans, we had a big grain report this morning, and so I stopped looking at the soybeans over here apparently. But if we go back here to where the grain report came out, Dwayne was showing it in an hourly chart and then a 10-minute and a 5-minute. But if you look at it here on the 4-tick range, from right here when the grain report came out, where price was up at 1557 to right here, this was 1 minute. All these bars you see in here and all this movement was 1 minute. The chances of being able to trade anything in here pretty slim, but it's possible you could have. I wouldn't have suggested it. The range was 50 from 1557. I think it dropped 30 cents, then it rose 40 cents. In about 5 minutes, it dropped 30 cents and rose 40 cents. 6 minutes, I guess. But after the news event, let me blow it up a little bit so you can see it a little bit better. You had the break right here, the break there, the down close right there. You could have gotten short on that if you were able to trade in this period. It came up, it nailed it right here for that huge move down. Now the divergences would be all over the place on this, so I'm just showing you right here. In this first minute here, the divergences, you wouldn't have been able to play with those. But on the break on the upside, here was the bar that broke it, here was the one that closed above it for the move up. Now, this blue line right here, you can see this ahead of time. I mean, let's go to where we are right now. You can see ahead of time where that thing is. Okay? So you can have an order waiting there, anticipating that it's going to turn blue, because the rule for it to turn blue is, let's go back to exactly where that is. The rule for it to turn blue is for there to be closes between the green line and the yellow brick road when the MA1 is still above the green line. Okay? That's when it's going to turn blue, when you get those closes in there. So you can tell when it's going to turn blue, so you can put your order on ahead of time knowing that it's going to be blue and take it right there. Okay? Minimal risk on those trades. You don't really need to risk a lot, but I'll get to that again in a minute. You can see it bounced right off it there, came back down, it went right through it right here. And not every trade is going to win. If you had 8 ticks risk on this trade, I think you would have lost all 8. 1442 half is what you would have been entered in at, and 1542 half and 1540. Yeah, it would have stopped you out by a half a point. It happens, but you know what? Right here, you just made 6 points or cents or whatever it is. Moving forward, in here you see we had bullish divergence, tested the BBC, a break to the upside. Didn't test it in here. Break to the downside there. Tested the BBC with bearish divergence, and it moved down. It moved down off of it there. Break to the upside here. Tested the BBC with bullish divergence. Big move up. Then the cycle needed to reset down here, so there were no more trades on that side. It kept moving along. Break to the downside right in here. Tested the BBC with bearish divergence and a down close. Tested the yellow brick road. Almost tested the yellow brick road. Tested the BBC with bearish divergence down here on the bottom. When I'm saying bearish divergence, I'm talking about the green line and the cycle. When the green line is moving away from the cycle portion is the red and blue line down here. Okay. How am I doing on time? 12:39. All right. Did it again right here. Did it again down here. And this is one of those cases where waiting for the close above it worked out, because this is the spot where it closed above it. All right, so you wouldn't have gotten stopped out on this move down. You would have been able to take the long trade off of here to this spot up here, and if you were not already long, you could have gotten long right there. And even if you didn't do that, you could have gotten long over here because you had bullish divergence and it tested the BBC with an up close. All right, this was soybeans this morning, and this was all pre-market. Okay, all pre-market. You see it bounce there, it bounced there, it bounced there. This one didn't work. Not all of them work, guys. I'm trying to highlight all of them for you. It bounced there, it bounced here, and right here, break to the downside. Big move down, nothing in there. Break to the upside, big move up. Bullish divergence, tested the BBC with an up close, bounced off of there. Bullish divergence, tested the BBC with an up close, and that was the end of the morning for the soybeans. That was a busy day, guys, on the soybeans, all right? And that's not even the market that I wanted to show you differently today. You know what? I've used up a lot of time. I'm just going to run right over to the gold. Okay. I didn't calculate all the points and all that stuff on the soybeans, but I did on the gold from the open. From the open, if you took every pullback to a colored spot on the yellow brick road with one contract, and you wrote it out to the max, it would have worked out to $1,220 a contract this morning. Now, let's change that a little bit here, because you can see that's including the losing trades. There were these 2 losing trades right at the start. But let's say you don't ride it all the way out, because the chances of riding it all the way out are pretty slim. Let's say you ride it out. What's the minimum? The minimum we have, 70. Okay, let's say you have 70 as a profit target on each one. Okay, let's say 1, 2, 3, 4, 5, 6. 6 of them went for 70. That's $420 minus $160. That's $260. $260 per contract profit on the gold this morning. All right, that's not bad, and it's a pretty easy thing to do, a pretty easy trade to execute. And you're risking a maximum of 8 ticks. Probably wouldn't have even needed to risk that much, but risking a maximum of 8 ticks. And on all these ones that went 7 ticks, this one actually went 30, this one went 28, that one 25, this one 30. And this one actually went more than 30. This one probably only went 28, but and that's where I had stopped it. There was another one right here. There's another one right here. There's another one right here. Those all went 7 ticks as well. So if you add on another $210 to that between the open at 9:30 and right now at 12:30, that's what would that be? $470. Not a bad day per contract. All right, and that's just taking the bounces off the colored area on the yellow brick road. Is every day going to be like that? Of course not. But today was, and I didn't include the pre-market stuff. There were more of them here in the pre-market. Okay, you can see all in here in the pre-market. It's doing the same thing over and over and over and over and over and over and over again. All right. With that, guys, I'm going to wrap it up. I guess I spent more time on the soybeans than I did on the gold, but the thing I did different on the gold was I actually quantified the moves. If you had an 8x8 bracket on these things, you would have gotten a break even on this one. You would have gotten 80 here, 80 here, 80 here, 80 here. If you had even a bigger bracket, you can play around with it however your risk comfort level is. All right, this is the 4-tick range, but you can also do it on a larger time frame. You could do it on whatever time frame you want. The same thing is going to apply. All right, that, my friends, is where I'm going to wrap it up. Again, if you have not taken a free trial with us, go to www.cfrn.net/apply. Take the free trial. If you're on the free trial and you want to get into the partners meeting tonight and you don't know how, send me an email. It's a partners meeting in the header. Put your phone number in it, and I will get back to you and let you know. Okay, I'll give you all the information you need to get into that partners meeting. If you're a partner and you don't get your link prior to the meeting tonight, if for some reason something, that your link suddenly goes to spam or something like that, and you don't get your link prior to the meeting tonight and you want to get into there, just send us an email at support@cfrn.net and we will send you the link. All right, that's it, guys. Going to stop the recording here.